good morning. You're watching The Market right here in 18 Hour with me, Ashraf Faridi, Anisha Jain, as well as Nikunj Dalmia in the studios. And for the markets, we are actually chugging along quite nicely, stepping into the Diwali week with some fireworks for sure in hand. And we've made it to that 19,400 mark, so not bad at all. In fact, we managed a move of over 400 points in just the last 3 trading sessions alone. And we've been doing that minus any support coming in from FIIs. And even yesterday, when you had the likes of SBI and other PSBs not performing, the other heavyweights did the lifting.
The small cap index is at an all-time high.
Yeah, record high.
Where is the correction? So let's understand where we stand. I think it's very clear what we started discussing mid last week, that this was a bull market correction. It has turned out to be a bull market correction. Very sharp, very savage. And before you realize that your portfolios got dented by 5-10%, the correction actually gets over. For me, the most meaningful mover, I think, is the small cap index, because that's where everyone thought that, okay, there is a bubble and there is a trouble, and there is a bubble and a trouble both, and that index has jumped right back up. That's part one of the story. Part two of the story, Nifty now. 2 step forward, 1 step back. 2 step forward, 1 step back. In the month of October, it was 1 step forward, 3 step back. So there is a definite change in terms of orientation. Now, why is that happening? The reason why that is happening is because globally risk on trade has started again, which is Bitcoin is up, yields are down, US markets have made a sizable recovery, and crude has plummeted. So you can say that bulls are getting some degree of tailwind because of global cues. Local confidence, which got fractured, has got mend again, and Nifty is clearly following a pattern which could be called as 2 step forward, 1 step back. What do you do in this market? Well, you should stay with invested, you should not go stock short, and I sincerely feel that the market, every time when a shakeout has happened, the orientation of the market is also changing. Banks are coming back, pharma is occupying a center stage, railway stocks are pausing a bit, defense stocks are no longer, with the exception of 1 or 2 Kochi shipyard where there is news flow, 1 or 2 defense stocks, they are also taking a back seat. But the small cap index, ladies, is at an all-time high. How interesting is that ring? Just the ring of the small cap index. So we are in a bull market which corrected. The correction has come and gone.
The correction has come and gone. At least that's the verdict so far on the street, and it's bank and pharma which is taking center stage. So that's a space to be in. But as far as the global cues are concerned, well, it still continues to be green across the screen, but not by as much. Yesterday, we did see a bit of a risk-off play because the US 10-year yields jumped back again around that 4.66% mark. So 10 basis point is kind of the intraday move that we saw on 10-year yield. Having said that, the indices, the equity indices managed to eke out minor gains. Nasdaq has continued to gain for 7 sessions on the trot. The Dow and the S&P as well have been higher for 6 sessions, and this is I think the longest rally that we have seen in many months so far. In fact, Brent too has managed to stay below the mark of $86 per barrel. So the fact that you were alluding to, Nikunj, that the global cues continue to be supportive, and Brent, which is a major factor for India, continues to be around that $86 per barrel mark.
See, I think crude and yields are an indication of the view of the world in terms of risk and in terms of consumption. Crude coming down at a time when the geopolitical concerns have not settled completely, that just tells you that markets have ignored the reality, that markets have ignored the concerns which historically have come every time when there is tension in that part of the world. That's one. Second, crude coming down when winter is approaching and production cut has been implemented by some of the oil producers. They have not pumped in additional oil. That is an indication of world feels that the demand deterioration actually would start, and global commentators have already started making a case that okay, it was money printing and it was more balance sheet expansion which prevented the US economy from slipping into a recession, but next year recession is coming. That's the view of the world. So yield is down, crude is down, and global setup for equities I think is looking quite favorable. So frankly, if you ask me, between October and now, what has changed? We've come on the right. The geopolitical tensions have not shaken us. The scare in the bond yield, we've survived. And the narrative, despite the US GDP print, is that we are in for a low growth in 2024. When you are in a low growth in 2024, yields will be down and commodity prices will be down. The conjecture is that if world is slowing down, then should equities do well? Now that's where the disconnect is. And I think it's a matter of time, mark my words. I don't know whether it is this year or next year, whether it's January or February, whether it is December or March, but FIs will come back. Because with each passing day, US economy is deteriorating, recession concerns are coming back, and the only option is that you migrate back to emerging markets. So I think there's a compulsion which is at play that they have not come back to India, but I'm not saying I'm making a prophecy or something, but I'm connecting the dots here. They will come back. And when they come back, there will be no sellers.
Yeah.
DIs are buying, and FIs if they buy, then we are looking at a bout of short covering.
Yeah, absolutely. And, every dip in the market, I mean, to be honest, has been shallow. Even if it has been steep, it has been very swiftly bought into. Case in point, the dip that you had about 2 weeks back, and look where we are from there. In the last 5 trading sessions alone, we've made a gain of about 400 points. The other thing, and that's the other silver lining, the fact that the IPO market as well has been very, very lively. Today, of course, the much awaited Honasa, or the parent of Mamaearth, is going to be listing. The expectation on the street is that it's going to be a premium. We had a good listing yesterday as well. The IPO price is set at about 324 rupees per share. I mean, the only thing that you could argue is that the retail participation was not as much high. It was more the QIB portion which did see a flurry. But you've got ESEF, SFB as well. You've got ASK Automotive. You've got Protean, eGov as well. So all these are seeing good participation.
Okay, let's start with Honasa. I mean, this is something what I've understood when I spoke to some of the folks who understand how to value a company like Honasa. They are of the view that, look, it's richly priced in the near term. It may not be the best stock in terms of giving you returns. I think Honasa in my book is something which you would say that, okay, it's got all the ingredients of becoming a brand, and they've successfully created a great brand, Mamaearth, in a very competitive environment. They've taken the legacy brands, the Godrej and the HUL, and they've really taken some of those brands head on. In that, if you manage to create a brand, I think that just speaks volumes of what the management has achieved. But B, when you connect the valuation, and since there are a lot of relative valuations available in terms of the consumer staple, and then you compare that with Honasa, you would say it's not a stock where you can really say that you're getting gold at the price of silver, or even 24 karat gold is coming at a price of 22 karat. I think it's richly priced. It may not, it may not be a stock you want to chase at these valuations. Stocks like Honasa or Mamaearth, you need to buy them when there is selling in the market. You got to buy when there is blood on the street, so to speak. So these are stocks you want to buy when there is bad news in the market, which will have an impact on the correction. I think I like what they've created in terms of business. I like what they've created in terms of brand and the approach, and the acceptance in terms of consumer. Now, how are they able to walk the path of profitability? I mean, can they continue to grow this brand? Will they cut expenditure in terms of advertising? Will they be having their own niche presence? These are stories which I think markets will discover. So I think for Honasa, in my book, there is a belief, but there's a long discovery which will finally establish the stock price. That's my view. But otherwise, I think what we are not realizing is that there's so much of interest in the IPO market and the variety of companies which are getting listed. Aisha, there used to be a time then only infra companies were going public, or only IT companies were going public, but look at the variety of companies which are going public, from hotel company to a hospital company. Cello yesterday. Then you've got Protean, which is a data company. SaaS companies are getting created. So the options of where the Indian entrepreneurship vehicle now is, I think, extremely exciting. And new exciting businesses, which are the high growth future businesses, they're getting added. Some of these businesses were always in the private domain. And you said, oh, I wish I could buy a Zomato. I'll wait for Zomato to go public. I'll wait for Paytm to go public. Guess what? Some of these exciting businesses are going public now.
Okay. Yeah, go ahead.
No, absolutely. So a lot of these private, options are now available publicly as well. And let's see how that particular listing happens. Of course, the other big event to watch out for today are the state elections. They are underway now today. The first phase of the electoral poll has started in 5 states. So we'll watch out for that as well. But that's what the national headline is. What about the international headlines and the global commentary that we're getting in? Let's go across to Winnie to find out that.
Good morning, and talking about those global commentaries that are coming in. First one is coming in from the Bank of England's chief economist, Bill, who's highlighting in terms of the UK inflation. Now they believe that UK inflation soon will start falling in line with the lower rates that we've seen in the rest of the world, reflecting especially from the drop in their energy prices. He further highlights that the sharp further fall in inflation rate below 5% in the month of October, that will help bridge this gap that we're seeing between the price increases in UK and the US and the Eurozone as well. So that's a commentary coming in from Pill. Moving on, we have commentaries that come in from Federal Reserve Bank's President Neil, who's highlighting in terms of it's too soon to declare victory over inflation yet, and despite positive signs that price pressures are easing, he still is a bit cautious before they declare some bit of a victory. You should wait and watch what the situation is in terms of inflation and whether we've actually won in terms of that, and more data points will be something that will be indicating, so he's keeping an eye out on that. Lastly, we have commentary that has come in from Peter Schiff in terms of the national debt in the US. He's highlighting that due to the weak economy, there's a rise and the rising rates. The national debt is something that is expected to move up even further, and that would actually indicate a bit of a deficit coming in, and despite that official deficit projections that they have that are under 2 trillion annually, maybe that could be a concern and that could be a worry if the economy continues to be weak.
We leave it at that. Let's now welcome on board our chartists and figure out what the domestic market is looking like. We've got C.A. Rudramurthy, Kunal Bothra joining in on the show. Kunal, hi, morning. A nice move yesterday. We've made it to 19,400 thanks to Pharma and a couple of other blue chips. SBI not performing. What's in store for us today?
Yeah, it was again a mixed bag from the larger cap names. Most of the large cap stocks on the banking side, for example, HDFC Bank, SBI, they'd shown muted performance for themselves. But on the other hand, I think there were good signs emerging with the likes of ICICI Bank, Reliance Industries, Bajaj Finance, Finserv, etc., which are also leading the charge from the front. So there was a good mix of large cap names which started to show signs, at least in the second half of the trade yesterday. The Nifty scaled past or closed above the 90,400 mark, which had earlier been a previous support and then a resistance when the markets fell below the 9,400 mark. Now that the fact that we are back above 9,400 levels, and even if we try and just hover around this level for the next couple of trading sessions, that could probably be a good sign for the index when it's trying to move up higher into a newer territory for itself. Bank Nifty is back above the 200-day moving average, and I think that's the more important feature for the banking index, because this could probably establish a near-term support for the Bank Nifty. So the only the only point which you are actually looking out for is more participation from larger cap names, which has not been seen in the last few days, but hopefully we would probably expect those positive signs to come by in the next couple of days.
Okay, point taken. See, Rudramurthy, what do you make of the solid move in the broader market? We were just discussing how the small cap index is at record high. Whatever correction or over enthusiasm people were talking about is done now.
Yeah, definitely. I feel the market has made a very strong bottom on Nifty levels, where last time we saw 18,840, and those levels are very, very strong support zone. And definitely this bounce which has come from those levels will hold on. And even if you see mid cap as well as small cap, the all-time highs which are on small caps will stay on. Market has now become more stock specific, and having seen this rally now from those levels of 18,840 to current levels of 19,400 to 19,500 zone, now I feel large caps might just bit consolidate time wise, and we may use every dip as still a buying opportunity. This is not a market to short, and in terms of mid and small cap, you have to be very stock specific. Overall result season has also been very positive. Global wise, even macroeconomic developments are on the positive side. So all this tells to me that yes, there is still the rally to the Diwali which is coming on, and we will also see the pre-election central government election pre-rally also to come on. So I am very, very positive on market, and every dip has to be used as buying opportunity.
Talk individual stocks then. Kunal, what's on your list?
ICICI Bank is the first stock which I would suggest as a buy. Mentioned earlier that how the stock has managed to recover from its sub 200 DMA. In fact, that's I think just about few percentage points away from breaking past about the 50 DMA. That could be a strong sign of a breakout for ICICI Bank. So would suggest a target of 988. Stop loss could be kept at 934. And the second would be a buy on Polycab. This could be an interesting name over the near term. The stock has given a moving average crossover breakout yesterday after closing about that 5,000, 5,100 levels. So expecting a retest of the previous move, 5,400 as a target. Stop loss at 5,020 for Polycab.
Right. Rudra, what about your stock list?
I'm picking two stocks, both available in F&O and also from the broader market. So for me, BHEL looks very, very strong. This stock for last 2 months has consolidated in a very tight range of around 115 to levels of around 134. Now I am expecting a breakout above levels of 134, and BHEL will head towards the levels, the previous highs which it has made at around 148 to 150 zone. And for me, initially it has to move towards 145, and then once it crosses 148 to 150 can further move up. Keeping a tight stop loss of 128, I will be a buyer in BHEL. My second buy recommendation is on Manappuram. Again, this stock made a strong bottom at around 128 levels, from where the stock saw a great bounce from recent correction what it had. And now if stock moves above 144, again this will test those earlier highs of around 155, and further stock can go towards 170, 180 zone. So at current levels, I'll be a buyer in Manappuram, looking at initial targets of 150 and eventually 180 to come. Keep a strict stop loss of 138, both available in F&O. Looks a very strong buy at current market price.
Those are the top recommendations from CA Rudramurthy. But what about the stocks that you need to watch out for on account of news flow? We have Soma joining us in the studio to talk to us about a slew of downgrades that have actually come this morning. Let's start with SAIL as well as Bharat Forge. Despite a good show in terms of the numbers, the street is not excited about Bharat Forge at all?
Well, what CLS in fact is saying that they are still bullish on the company's growth prospect, but it is the valuation that has been concerning for them, and that's the reason they have downgraded the stock to sell from an underperform rating. But the target price continues to remain the same. They are saying that the subsidiaries have dragged the performance in the second quarter, but that was pretty much on the expected line. Standalone performance has been good. In fact, defense and exports have been the key triggers and the key growth triggers for the company going forward. It's only the valuations that has been the concern, and hence the downgrade coming in for Bharat Forge. And when it comes to SAIL, it's not post result, but the concern for Citi is the fact that steel prices, the premium of steel prices to China prices could come down going forward. They're expecting a 10% downtick on that front, and they're saying that the valuations continue to remain cheap. But it's also the fact that the ROE of SAIL is in low single digit of around 3% while peers have an ROE of close to 8 to 18%. So that's the reason why valuations are cheap. And if there's a fall in steel prices, they are expecting a strong earnings downgrade coming in for SAIL going forward. Hence, they have double downgraded it to sell from a buy rating, and I've got the target price by around 30 rupees, and the current target price sets at close to 80 rupees for SAIL by Citi.
I think, specifically when one looks at Bharat Forge, my sense is that what Bharat Forge was versus what it is, what it will be. That's a migration which, you need to understand. The over dependence on global exports and class A, class 8 truck, I think that's coming down. And that is going to be the irritant going forward, because the global business will be under pressure. But can they scale up something very large in defense? Can they really scale up something large in other manufacturing? And I think that is evident now. I mean, they are getting orders which are sizable. They are getting businesses which is better. They are now becoming what could be called as a complete engineering company, and that is, I guess, the migration which markets like. But the migration will take its time. The stock has already seen a run-up in anticipation of what they could do in FY26 and FY27. So that is making the stock in the near term look expensive. While company will continue to execute, while things are looking up in terms of the dependence and the how global subsidiaries would move, the challenge what some of the brokers Sumit flagged off is that it has run ahead of its time. So stocks like Bharat Forge, you're going to buy pretty much when there is bad news. For example, we saw sizable correction 8-10 days ago. That's the time if you just keep an hawk eye and you would say, I'm going to invest in some of these stocks for long haul. I like the business. I like what they're doing. They fixed up, the problems what they had in terms of over dependence on the global class A truck sales. So that is the time to buy these stocks, is when there is a little bit of turbulence. maybe a bit of a stir, and maybe some bad news which comes from unexpected macro quarters.
Okay, two more downgrades coming in. Samit, BOB is justified, but why divvies?
Divi's yesterday, if you see the rise in the share prices, 5%. They said that the CDMO business would get a good quarter, good financial growth in third quarter, and they're also saying that these stocking issues are going back. But Jefferies does not believe that. They're still saying that the triggers for the company could still be 1 year away, and they have in fact cut the EPS estimates for FY24 to FY26 by around 15 to 18% because they are still expecting margin contraction going forward, and there are no growth triggers going forward for Divi's, and hence the downgrade coming in by Jefferies for Divi's to around to hold from buy, and they've cut the target price by around 800 rupees to around 3,500. And when it comes to Bank of Baroda, Nomura is expecting the ROAs to moderate going forward, NIM compression to be much more than what the street is expecting going forward, and again there is no positive trigger, near-term positive trigger for Bank of Baroda, and hence they have also downgraded their rating on Bank of Baroda to a neutral from buy, and have lowered the target price by only 5 rupees or to around 215 rupees.
You know, with PSU banks, I think it's getting more and more evident that the cost of liability or the war of liability which was there within the private and the PSU banking space has actually started hurting them. The ROAs, have they peaked out? If they have peaked out, what really could be the near trigger for at least large PSU banks? So suddenly, Bank of Baroda and SBI have started underperforming. SBI started underperforming 3 months ago. I think Bank of Baroda started underperforming from last 1 month. Why? That's largely because markets are saying that the ROAs have peaked out. Markets are saying the liability franchise in a short term will remain under pressure. I think that large part of the re-rating, look at Bank of Baroda, 3 month change just flat. My limited point is that while markets are excited about financials, I think markets would be preferring right now private banks rather than PSU banks, given that one-time re-rating in some of the private banks, in the PSU banks is over. And you know, Samit, when it comes to DVs, I guess, yes, you're right that the margins are under pressure, valuations are stretched, but then they're working on what could be called as this wonder drug GLP-1. And for me, the excitement in DV stock yesterday, let's look at the DV stock yesterday. I mean, why did the stock go higher yesterday? I mean, markets figured out the number, they came during the market hour. And why did the stock go up yesterday? I think that's largely because of the timeline what they've given for GLP-1. So GLP-1, ladies, is this wonder drug. I'm not so sure of the generic name here. GLP, it is supposed to be used for diabetes management and weight management. Anything which has got to be diabetes and weight management, well, the market size becomes very large. Diabetes is a problem globally, and weight management is something which everybody is working towards. So it's a new wonder drug which every company is trying to now develop, and I think Divi's has given a timeline there. So that's the catalyst. So my sense is that the downside gets limited. But for Bank of Baroda, I think the upside is limited. So if you have to recall, I think Bharat Forge, buy on a bad day, Divi's, stay if you own it, and Bank of Baroda, you may want to sell on uptick.
Okay, so that's the take coming in as far as Divi's and Bank of Baroda is concerned. Thank you so much for joining us in the studio, but time now to also listen in to the big voice that we have for you. None other than Christopher Wood. He's talking about the real estate sector and his take as to how long the cycle can really continue.
So I've got 4 property stocks in my Indian portfolio. We've entered our 3rd year of a property upturn. Now, last year when the RBI was raising rates, the property stocks did very well, I believe, in 2021, when people recognized that the property upturn was starting after, remember, a 7-year downturn. Then we had RBI raising rates, so the property stocks corrected. But although the property stocks corrected last year, the actual property upturn continued. The property upturn was not impacted at all by the monetary tightening. And then in the last few months, as the markets become more hopeful that we've seen the last of RBI rate hikes, the property stocks have rallied again. And it remains the case that, Indian property sector or Indian property stocks are very small relative to the size of the economic opportunity. You had this very dramatic regulation or reform of the property market created by the Real Estate Regulation Act, RERA, which has caused a massive consolidation amongst developers. So the surviving developers are in a very strong position because so many of the competitors have disappeared.
We met in May last when you were in India,
And that time you added Zomato to your portfolio. Now, while the classification is internet, I think it's becoming a consumer company.
Yeah, that's wrong. It should be defined as consumer.
Do you think a company like Zomato has a long way to go? Because, even the run-up in Zomato has gone from 50 rupees to 100 rupees, the market cap actually still way below $20 billion.
Well, the interesting thing about when I last checked this, the Zomato market cap is way lower than the nearest equivalent in China, which is Meituan.
So do you think it could become as big as
Yeah,
Meituan?
the key issue, if these stocks actually start making money, then they become very attractive.
Back with the market, right here in 80 now, and days after announcing a profitable second quarter as against a loss last year, India's largest airline, that's Indigo, per market share, said they will expand on more international routes, including to Medina and Bali as well soon. The airline, in fact, is expecting grounding of more aircraft in the fourth quarter because of issues in Pratt & Whitney engine, but is also taking mitigating measures to maintain capacity. In fact, my colleague Sumit Chaturvedi caught up with Indigo CEO Peter Elbers in this exclusive chat.
As one of the largest, if not the largest operator of Pratt & Whitney engines, of course, we're in constant dialogue with Pratt & Whitney, both on what precisely is going to happen at what point in time, as well as on the financial part of it. And I think next to what the precise information from the Pratt & Whitney side is, we're also discussing with them how can they help us to take some of these mitigating measures. And until we have that clarity, any number would be more like speculation going forward, because it all depends. There's an equation of what is the number of planes and what's the number of engines being involved on the one hand side, and how much mitigation we can do on the other hand side. So we focus clearly on not only what is the impact, but also how we can do the mitigation and to what extent Pratt can help in addressing that mitigation. When it comes to the compensation, of course, that's an outcome to clearly also what's the overall impact. And that's been a topic of discussions, I should say intense discussions we're having, of course, with Pratt & Whitney.
And any clarity on compensation when it will come to you, that is also depending on the grounding and the clear picture on grounding of aircraft, the numbers?
Yeah, well, I think you pretty much mentioned it. That is, of course, there's a correlation between what's going to be the compensation on the one hand side and what is going to be the precise number of groundings. And as that number of groundings and as that number of supply chain challenges is still fluctuating, the same would go for that number on compensation. I think what is clear that Indigo is operating in world's most dynamic, vibrant, and fastest growing market. We need that capacity, and we're putting all our energy in obtaining that capacity with the help of Pratt, and outside the help of Pratt also with some other arrangements we're doing.
And let's talk about expansion, Peter. Last time we spoke, clearly you were quite bullish about expansion on global front. You have launched 20 new flights globally in the past 6 months. What is the outlook going forward, especially in the coming season of December Christmas year end?
Yeah, thank you, Simon. I think what is very encouraging to see is I recall pretty soon after I joined Indigo in August, September last year, I joined the inaugural flight of Indigo to Ras Al Khaimah. At that point in time, that was our 100th destination, and it was actually a moment of big pride and celebration for the company. Today, we operate 115, and soon we'll indeed reach the 120 in terms of number of destinations. So we have, in fact, delivered of what we promised in terms of international expansion and domestic expansion. The most recent international expansions to Baku, Tbilisi, Tashkent actually are doing very well. We have indicated that soon we hope to be able to announce also new flights into Bali and into Medina, and that will further expand our international portfolio.
Okay, so that's the latest commentary coming in from Indigo, but let's welcome on board Sanjeev Bhasin as well to talk to us about specific stocks. Mr. Bhasin, hi, good morning. Thanks so much for making time. Let's begin by discussing the pharma sector. The earnings this time have managed to show an improvement with the exception of Divi's, which of course was a big miss on the margin front. The commentary is something there the street likes. Even Gland, after many quarters, has managed to deliver a okay set. What's your take, within the pharma space? Which are the stocks that you like?
Yeah, good morning, Anisha. You are right. Divis did disappoint, but the management sounded very confident on the second half, and that's the commentary from a lot of players on the second half of the calendar year, and that I think is going to be very instrumental. Now, pharma, we've seen blockbuster numbers from Cipla, Sun Pharma, and Dr. Reddy. I continue to think the dark horse play over there, which will come out with superb numbers, is Lupin. Lupin has undergone a lot of sea change in the last 2 years. Their generic pricing, their distribution, and their new product launches are very strong. So Lupin is my dark horse play. The stock has given a smart run up, but I still think Lupin is headed higher. You can add a basket of maybe Cipla, and given that it is a takeover target, given a Cipla, Dr. Reddy, and a Sun Pharma. DVs, yes, on declines would be a buy, because in contract farming, in the API distribution, they are one of the largest players. And I think the second half will see much better margins and volumes.
Sanjeev, hi, good morning. It's the small caps wherein, all the gains are getting made, with the index now at a live high once again. Any small cap idea that you would have for our viewers?
Well, Aisha, it's very difficult. I think like you said, I've just made an observation. When the markets fall, the small caps fall about 0.5%, half of what the large cap. But when they rise 2 times the amount, which is telling you the flows, the numbers, and the left out feeling is humongous. I still think, you can have a bargain like an idea. Now, ideas run up from 11 to 14, but given the spate of 4 positive things, I would still put my money on Idea and TTML. The dark horse play over here, again, today's numbers will be Devyani International. If you saw the numbers from Varun Beverages and the others, they've been re-rated. Devyani is one stock you must own in your portfolio. It's an expensive stock, but given the pedigree of the management, the business, I think this can be an outperformer. So small and mid cap would be Idea, and Devyani would be my bet on the slightly longer term, slightly more market cap play.
Okay, so that's Devyani International, one of the names that you must have in your portfolio. But Mr. Bhasin, what about Nykaa? What do you make of the earnings?
Well, I have not fully diagnosed the numbers. We've kept our preference to Zomato, PB Fintech, and Paytm. Nykaa is in, maybe the numbers were slightly ahead, but the type of competition which is coming around with the Mamaearth and the others. So we will have to watch the numbers and the performance, the management's language. I won't be able to comment much on it because I'm not tracking it for some time.
Mamaearth itself, Mr. Bhasin, any takes there?
On which one?
Mamaearth, Honasa, which is getting listed today. What should investors do?
No, both those issues today, Mamaearth and ASK, we are the merchant bankers to that, so I will not be able to comment on that.
Fair enough. In the meantime, let's go across to Vinny to get a sense of those Nykaa numbers as well and more details on that. Hi, Vinny.
So absolutely, it's a decent set of numbers that has come in from Nykaa. When we're seeing in terms of the beauty and personal care segment, yes, that's seen the growth coming in there, as well as margins have seen an improvement as well. Other than that, in terms of overall, when you look at the fashion business, seems like that growth has picked up as well, and there's an improvement in margins over there. But a slight bit of misses overall coming in on the EBITDA front, but all in all, an inline set of numbers that has come in from the company. BPC gross merchandise values that has grown by 23%, and NSV growth is also 19% in the BPC segment. Fashion segment also has now stands at 130 crores, which is a growth of 28%, and overall the strong growth is seen in NSV over here as well. Now what the management is highlighting is that they expect Q3 to see better growth coming in. Q2 obviously had that festive season delay, so yes, we're seeing that Q3 is expected to see a better growth coming in due to the shift in the festive season. Management is aiming to maintain the current top line growth momentum in the fashion business and expect the margins to improve there sequentially from the current levels as well. And overall, they believe the peak of the fashion losses is now over. Management also is highlighting in terms of that they remain committed to continuously improving the unit economics of the fashion business as well. So keeping an eye out on that, as well as they believe that will overall improving overhead costs will be driving other margins of the company going forward as well. Normally the second half of the year is much better than the first half of the year for Nykaa as well. So let's keep an eye out on Nykaa.
Sanjay, why has pharma made a comeback? I mean, we don't realize it while we talk extensively about banks and defense. Look at pharma stocks. Aurobindo from where to where, DV, Sun, with the exception of, let's say, a Loris and a Granules, by and large, pharma has made a comeback.
Is that for me, Nikunj?
अरे सर कितने बसीन साहब हैं शो के ऊपर
अच्छा
एक ही तो है वन एंड ओनली इन द वर्ल्ड ओनली
हाँ तो देखिए निकुंज जी गुड मॉर्निंग देखिए फार्मा becomes a very good proxy to a weak rupee. A B everyone thought that COVID and the thereabouts after that was the be all end all, but not realizing that generic pricing, the power to compound into more geographies, and the pricing of their products became very, very attractive. And numbers have been, actually beating all expectation. Plus, like I said, the biggest alibi has been that rather than IT, you would be in pharma to play a weak rupee, and that has been a splendid, outperforming sector. I continue to think that some of the select players, see, these are very big brands from Cipla, Sun Pharma, Aurobindo. Now they are just coming of age. And I still continue to think Lupin can be a huge outperformer. You can add a basket of stock. But Nikunj, here I would advise investors that do a couple of research and buy a mutual fund which has a pharma specific. SBI and Nippon have two very good funds. Their fund managers are very, very, very learned, and that diversification of portfolio would be very ideal over here.
Kunal, Lupin, hello. I never thought at the beginning of the year this would be a 60% reversal in Lupin. Everybody had written it off. Yeah, Anisha, just think about it. Lupin, DVs, Sun, Aurobindo. Aurobindo has almost doubled. 400 has become 800. Yeah. So while we talk about banks underperforming, we talk about Tata Motors being the darling, the real stealth move actually has come in some of the pharma stocks. 100% in Aurobindo Pharma. 50% plus in DVs from the recent low of December. The comeback in Lupin, nothing short of unreal. This is like a classic sector which was unignored, underestimated, not discussed, never occupied the front seat. But these are large companies which have made such formidable comebacks. Kunal?
Yeah, in fact, Lupin has been a stealth move clearly because there was a point where Aurobindo Pharma, Zydus, Glenmark, these were three best performers till I think at least May, June 2023, where these stocks moved up by a margin of I think 80% to 90%. I think Aurobindo Pharma did more than 100% returns. But I think these three were the key performers at that point of time. Then it was followed by few comebacks in large cap names like Cipla made a comeback, Sun Pharma managed to come back to that 1,000-1,100 mark. Lupin, was more of a stealth move, but even this last 6-8 months of price recovery for Lupin, it's been a very steady recovery for the price. And over the last 2-3 years, specifically, the stock had been beaten down significantly. So I think 2015-16 high for Lupin was around 2,200 levels. The stock at one point of time was around 600 mark or sub 600 levels. So it was beaten down significantly. The stock took its time to consolidate for at least the last 2 years, and the last 5-6 months, the recovery for Lupin has been very stable as such. So this could probably indicate that this may not be a short-lived trend for many of the pharma names, because we've seen many of the pharma stocks migrating or moving up to a higher level of zone in terms of support. Lupin also has managed to break past about those key resistances. It's confirmed a breakout of 200 moving average sometime back. So that could be a major support for the stock over the near term. And now what we can expect is that these stocks would get into that strong uptrending mode even going forward. So now we are looking at these stocks converting their short-term rallies or this last 5-6 months rallies into strong multi-year uptrend.
Mr. Bhasin, when would you look at booking some profits in the real estate names, if at all?
Very difficult question, Anisha. If you tried that in the last 6 months, you lost out on the last variance of them. And remember, when gold and stocks do well, all asset classes will flow into fixed assets. I live near just 1 kilometer away from Camellias and Magnolias, and DLF is sitting on hot cakes. They are selling like anything. Godrej is launching new products which are getting projects which are getting sold out. I have no two ways that there is miles to go. So, stocks which are making new highs, the underlying business, the fundamentals of the wealth creation and owning an asset like real estate, whether Bombay or Delhi or the smaller cities, even in smaller migrated city, You won't believe the type of appreciation in prices from Rajkot to Junagadh to Amritsar. And I think that these big players have made a presence throughout. At least NCR, they are one of the biggest players. And Anisha, go with the tide. Don't try and time yourself in booking these stocks, because I think there is still miles to go. Real estate turns once in 10 years and then it rides for the next 3-4 years. So till the elections or the budget, we will stay put. Then we will take it on the basis of some volatility. But I think asset prices are set to be higher, at least in the near 6 months.
DLF 592, 50% this year. You know, guys, we don't realize that what a year it's been. While we may look at the market from the prism of Nifty and say it's nothing sort of an year, but stocks have just gone gangbusters. And when I say year, November and December, this is beginning of the November, and then 2 months are still left. And I don't think we are done with the last year. I'm absolutely clear with this one. What should one do with Zomato now? Trading, volume, excitement, momentum, everything is there. But at 125 rupees, Bhasin Saab, Zomato is also trading at a market cap of 1 lakh crore. 1 lakh crore is a very respectable market cap. And at 1 lakh crore, if I look at the profit what this company is doing, yes, growth may be high, it is still 40-50 crores. So while this high growth business is great, but at a market cap of 1 lakh crore, I'm getting several companies where the profit is 500 crores.
Yes, that is a difficult pill to swallow. But if you saw the compatriots in maybe China and the US of a similar business, their market caps are much higher. So I think that, see, this is the first type of listing in a space which it owns. And given the biggest demographic premium of India and the houses converting from millennials to order when they want, their margins expanding, now they are creating an AI on a lot of things. So very innovative and very, very, fruit bearing. Now, Nikunj, in the short run, like you said, market cap and pricing is not giving any room of comfort, but ownership is the key. So you've seen 140 in listing to hit 40 and back to 120. If you sat through this 1.5 years, you didn't lose money. And even if the actual investor at 76 is making a handsome profit. So I think new age businesses, fintech, Paytm, Zomato and PB fintech likes, you have to stay put for the next 2-3 years if you are a wealth creator and you can sit through some of the volatility. Evaluations will always be slightly expensive and the missed out feeling on Zomato is humongous.
It is indicating that we could be in for a mild downtick, which is perfectly acceptable. Metal stocks, C. Rudramurthy, China, yes, no, nobody knows. But metal stocks, where are they headed?
See, for me, if I look at specifically Tata Steel, SAIL, Jindal Steel, all these stocks have not done so good for very short term and momentum is definitely lacking in them. If I see, for example, SAIL on screen, so I see, yes, this stock can come down towards levels of 80 where there is a strong support. So as a trader, I don't want to buy a stock which is falling and I don't want to catch a falling knife. However, strong support for SAIL comes at around 80 levels where one can look at buying it for portfolio. Similarly, if I see Jindal Steel or if I even see Tata Steel, even with whatever numbers came from Tata Steel and the way the stock has reacted, it is now at the strong support zones of around 114, 115 where one can buy for portfolio. And if I have to look at the chart patterns of Jindal Steel, again similar patterns, I see this stock has corrected from levels of around 720 and now the strong support for this stock is somewhere closer to 580 zone from where we have seen a short-term bounce. So yes, if you are a long-term investor, you want to build a portfolio, look at stocks like Tata Steel, Jindal Steel, but however, as a trader, I will surely avoid these stocks because it lacks momentum. And second, it is just giving a short retracement or a bounce with a clear downtrend which is there going on for a medium term. So as a trader, I will definitely avoid, but as an investor, if you want to pick these stocks, buy it closer to their long-term support zones and you can just hold them for a long-term investment.
Point taken, some of these metal stocks are better for a long-term investment. In the meantime, Mr. Bhasin, we let you go. Appreciate you joining us on the show. Devin Choksi also joins us to talk to us about some of his top fundamental bets. And Devin, I wanted to begin by asking you about the entire CAPEX theme. Do you think large part of the rally is done? Because in the last few weeks, we have seen sideways moves from the likes of Siemens, the ABB, that big rally that we were witnessing a few months ago. That seems to have subsided for now, with the exception of L&T, of course.
So, good morning, Anisha. Well, I think few things need to be observed. While most of the companies are continuing to take the advantage of a good capex cycle in the country because of the government spending, the spending by the industry, etc. I think the more important part is that these companies would have probably I think a growth rate moderated between 15 to 20%. If the economy is growing at 6.5, 7%, probably I think 15 to 20% kind of a growth rate would be a sustainable growth rate for most of these companies. Comparatively, I think most of the companies which are quoted in the market, I think have been driven by the euphoria and they started commanding the PE. Particularly, I'm talking about the mid-size and small-size companies, apart from I think the MNC companies. They started commanding the PEs of 40, 50, 60, 70s. I think that is where probably I think the problem lies. That on the one side, you have a good business situation, continued I think visibility, but on the other side, the valuations have far more, I think, advanced as far as I think the ability to invest, I think, to withhold this kind of valuation for a longer period of time. They have far more advanced in discounted futures, far more early in advance rather. So from that perspective, I believe that I think some amount of moderation or correction in the price is necessary in capital goods segment. Fully concurring that the demand scenario and the business outlook remains absolutely convincing, but the growth rate probably would limit between 15 to 20% on a sustainable basis. And that's where I think some correction in the valuations that I am expecting in the markets.
Okay. Again, BHEL. I mean, I never thought a stock like BHEL would do so well. Devan, why is L&T available despite all business moving in the right direction, balance sheet moving in the right direction, buyback moving in the right direction? It is still available at 25 times 1 year forward. I mean, isn't that cheap? And why is it so cheap?
So yes, Nikunj, I think it is available at a compelling valuation. I agree, and I think the growth rate for the L&T remains, I think, absolutely very convincing. In fact, never before in past we have seen 3 to 4 years kind of order book visibility which L&T is currently commanding. One of the reasons for which, as I see it, is a challenge pertaining to the maintenance of the margin. On one side, you are having extremely high amount of competitiveness in bidding and winning the contracts. On the other side, I think the input cost control has to be there. And in a given situation, which remains quite fluid, I think it is difficult for companies to maintain the margin beyond the point. Of course, they have got a passover clause in most of their contracts. But still, all said and done, I think there are certain challenges in the margin. And as a result of which, in the respective results that you see, including the last quarter, the margins have remained relatively more competitive. And that's where probably you are not getting higher valuation. In my viewpoint, even if the company gets 25 times what you call valuation, which is still okay because I think you're growing at a speed which I explained just now of around not more than 15 to 20%. So I think 25 times could be, I think, justified valuation as I see it.
Taken. In the meantime, Kunal, talk to me about the charts of Siemens because that stock might be in focus today. There are reports suggesting that Siemens Energy is looking at a sizable discount to kind of shed their stake in the listed Siemens India company. So that will be in focus. And the other one from yesterday, there was a big breakout on Aarti Industries. Any recommendations there?
So I'll start off with Aarti Industries. Very good breakout because yesterday we were discussing that the stock breaks past above its respective 200 DMA. That could be a sign of a strong turnaround, and that I think has come back after almost 9 months or 10 months of the stock trading below this critical moving average. So this could probably be a first sign of a strong turnaround for Aarti Industries. The stock opening with a gap up and then trading throughout the day with a strong positive gain. Even post the gap up, the stock gained up another 5-6% to close about that 505 odd mark on the spot levels. So that looks very attractive and would probably be of an indication that the stock would now move towards territories of 525 to 540 at least over the very near term, which means from a short term trading perspective, at least another 5% gain is what I would expect over the very near term for Aarti Industries. Siemens on the other hand is actually a weaker chart because the stock has been struggling over the last 1 to 2 months. It's already fallen from 4,000 levels to 3,000, 3,300 where it's trading right now. It's trading below the long-term averages. The slope of the 50 DMA has also started to increase up higher for Siemens. That could probably add to more pressure. And even in case if there is any kind of a rally, I would believe that the rally should be sold into for Siemens. So would not be bullish on the stock looking at the near-term charts.
Okay, time now to get you some more pearls of wisdom from Christopher Wood. Listen in.
I could easily have 40 stocks in my Indian portfolio.
So what do you think you wanted to add, you have not added?
Well, I have nothing in the auto sector right now. I have in the past. That's one obvious example. An area which did very well the last 2 years, which I was sort of familiar with, but I didn't put any money in there, was the defense sector. Then I could definitely have more in the power sector. I could have more in the engineering capital goods sector. And then I have almost nothing in the consumer sector. I have zero in IT services. Now, my three areas I've been playing right of late is financials, property, and what I would define as capex related. So if I wanted to focus, but I'm running this quite structurally, less tactically. So structurally, I've always had the private sector banks in my Asian portfolio. This Indian portfolio was only created more recently, but my Asia ex-Japan portfolio, which I run, the Greed and Peer portfolio, which I've run since 2002. Yes. The one sector I always had representation since 2002 is Indian private sector banks.
And how has that portfolio done? What's been the return of that portfolio?
That portfolio has massively outperformed the benchmark, the Asia ex-Japan.
Okay. So
I haven't got the data in front of me.
In that portfolio, apart from private banks, what else do you have?
What? Oh, right now?
Right now?
No, right now I'm about 45% in India.
Another stock which is worth revisiting, I guess, somewhere is Federal Bank. Devanbhai, this company has this bank has the highest profit outside Nifty 50. Yet, in terms of an market recall, Federal Bank is right back there. Do you think now next 6 months they belong to the mid-tier PSU banks?
So, Nikunj, I think my understanding that PSU banks have a better times now because of the balance sheets that they have corrected, prepared, whatever you call it as. And I think at the same time, SME, MSME segment where they belong to maximum, as far as the lending books are concerned, I think they are relatively, much stable compared to what they were before. So no questions asked on this particular aspect about, the prospects going forward for these banks. However, in my viewpoint, I think the size would matter. And some of the larger banks, would probably be having a larger advantages, both in form of, cost of funds. At the same time, the good accounts that they would possibly cornering for the lending purpose. And I'm talking about corporate segment first. The retail segment, of course, the corporate banks and the NBFCs have taken over compared to most of the PSBs. So in a way, if I look at it, the PSC becomes only, a value play and not a growth play at this point of time. Moment, you find most of the PSBs, available at a price to book value discounted below 1.5. You would find, some amount of buying interest emerging into them. But moment, you look at the growth, you will probably find your preference going towards the corporate banks and some of the larger public sector banks like SBI and Bank of Baroda. So in my viewpoint, I would still stay with, the larger banks because we believe that the growth in this country, which is now happening at a rapid speed, probably the size of the balance sheet would matter. And some of the larger banks would be the biggest taking the biggest advantage of this situation. So even if in the near term, relatively smaller return that you get from some of the corporate and the larger banks, I would think, it is worth staying with them for the long-term opportunity that we see into this sector.
So that's about some of those PSU banking names as well. Some of the other stocks which reported earnings and they were a decent set were the likes of Emami because there was a bit of margin expansion there. There was also RR Kabel wherein the margins came in quite healthy. The top line growth was also quite strong. In fact, all these wires and cables companies as well, Devane, they have seen quite a bit of re-rating. What's your take on that? And we are going through the list of some of the big movers from the small cap index. BSC is the other one which has made a comeback of almost 250% on a YTD basis. What do you do with the, let's say, cables and wires? Give me a pick from that sector. And what about BSC?
I think the building material segment in which most of these particular businesses fall into, I guess I think they are relatively much stronger placed than ever before. On one side, we are talking about higher demand offtake for the real estate. On the other side, I think the building material suppliers are part of the ecosystems where they are also having a significantly large amount of business to talk about. Take us a case of Polycab. I think the numbers that they have reported in this particular quarter are completely, I think they are outstanding. In fact, I think they are and completely surprising all the expectations. On the other side, I think they are continuously building the franchisee in FMEG segment, which is also equally important because I think the same customer who is consuming the wire is also consuming, I think, most of the electrical goods. So from that perspective, also, I think this particular company looks interesting. However, having said that, most of these companies have been discounting at least 2 years in advance compared to the current underlying growth. And that's where I would be a little bit wary about, I think, buying them upfront into the portfolio. Maybe I think one will have to wait and see the correction in the market, which normally I think comes in between. I think at such point of time, some of the good businesses can be bought into. If you get 15-20% kind of a fall in some of the stocks, I think where the valuations are at this stage at this point of time, would be a good time to buy at such kind of corrective fall. That is what my understanding would be.
It's low for SGX. It's been a flat year, frankly, on all account if you look at it. Devin, which is the favorite? Which is according to you, the best pharma stock to buy right now? I keep one or two names aside. It's been a good comeback year for pharma. Something which we've not talked about it, but something which actually has transpired into price action.
So I think definitely the leaders like Dr. Reddy's, Sun Pharma and Cipla have shown some good path as far as I think this industry understanding is concerned. They have systematically moved away from the competitive generic business into the specialty generic business, and they have been innovating the newer therapies and the newer treatments. So that is where probably I think these companies have led the path. They have appreciated justifiably so, I think, in the recent past, I think for a variety of reasons. And I believe that they continue to hold better promise going forward. However, if I have to look at, I think, the next opportunity, which is definitely, I think, asked for, I would probably look at likes of Divi's and likes of Laurus. Both these companies have significantly created the capacities, the expansion, and also I think they've got the ability to supply to their contract customers. However, at this point of time, I think some of the customers haven't been placing the order, and that's where probably I think these companies have found themselves a little bit on a challenging side because having expanded the capacities to deliver, I think they have not found enough amount of intake of orders. Maybe I think that situation gets corrected, which is expected to be. Then in such case, I think this kind of companies could become the contra buy, they are dark horse, and that can be considered from investing into portfolio. If 6 months back, I think our views were, I think, for buying the companies like Sun Pharma and Cipla, now we believe that I think the view can be shifted, I think, to a certain extent to buy into the portfolio the likes of Divi's and Laurus, which we believe, I think, has a bigger potential going forward from appreciation perspective.
Other stocks which are going to be in focus as well. And if you talk about the year-to-date disappointments, they continue to be the likes of LIC or for that matter Star Health as well. Star Health though should be reacting positively today. They've recovered slightly with an 18% growth in their quarterly numbers, or rather the October data. So let's see whether that really pulls up the stock or not. But yes, downgrades coming in for a sale, like we earlier in the show highlighted. Divi's as well with that Jeffries downgrade. By the way, Bajaj Finance as well, though the news is much known, but the QIP share sale is happening and the pricing has come in at 72.50 rupees per share at the floor price. Siemens as well, they've sought a discount for Siemens Energy India JV stake. That is what the reports seem to be indicating. So these are going to be a bunch of stocks to look out for. But let's just address some of the liquid movers from yesterday. You had a big move in some of these chemical names actually coming in. So, Deepak Nitrite, for instance, and Club Chemical Fertilizer, both, RT Industries, they held out very well. And I think SRF as well, if I'm not mistaken, did made a solid move in yesterday's session. Kunal, very decent gains coming in for a sector which of late has been like beaten down, I think, till about 15 days back. And now a massive move coming in most of these names across the board. Any opportunity here to trade?
In fact, it's a multi-month downtrend which was going on for these specialty chemical names. I remember, I think stocks like Naveen Fluorine, Alkyl Amines, SRF and so many of the other stocks, they were very close to their previous multi-year supports, or some of them had actually broken below those key support levels. I think Atul was also one of the stocks which had broken past below the 6,200, 300 odd levels. But in the last 3-4 days, we've seen two signs emerging for these stocks. One is, of course, that the long-term supports have more or less been held on for many of these names. So major retest of the supports have happened, and then in fact strong traces of short covering has happened into these stocks. So what happens is when stocks go into multi-month, multi-quarter downtrend, it becomes a sort of a zone where traders try to initiate more short positions, and all of a sudden when the trend reverses, these short positions, they tend to square off their positions immediately, and that's where the prices move up in a hurry. I think that's what we saw yesterday for many of these chemical names. That I believe could be the first sign of trigger on the positive side. Now we'll wait out for the next zone where these stocks break past about their respective or individual 200 DMAs and then start off a strong long built up formation. So I believe that this could be a three-pronged up move for many of these specialty chemical names. One was short covering, which we saw yesterday. We should see probably more traces of short covering over the next couple of days, and then a steady long built up.
Devin, I also wanted your take regarding some of these jewelry companies. Of course, Titan's numbers were quite decent. You have seen Kalyan move up as much as 150% this year already. And Senco Gold as well had seen a good listing. And since then as well, we have seen decent amount of gains build up. Do you think this is only that seasonal factor which is playing out right now? Or there's something fundamentally that we should see for a re-rating in some of these jewelry companies as well?
Well, I'm not too sure. I think beyond seasonal factor, I think how one should read this particular business, particularly because the fact that during the wedding season, which is estimated to be about 5 lakh crore kind of a wedding season that India is going to experience till February, given that kind of a scenario, I think demand for gold definitely is increasing, and so the demand for jewelry. And I think many companies have actually, I think, endorsed this viewpoint that they are experiencing higher amount of demand from consumer. Fortunately, consumer is having surplus in his hands to spend money, and that is where I think we are seeing the continuous expansion into this activity. However, as I see, I think always that during the festive season, I think the stock prices go up, and post Dhuleti, I think till the Dhanteras of the next year, I think we will find sideways trend into most of the gold and the jewelry stock. So if you are betting onto this particular sector, Dhuleti to Dhanteras period is the best time to accumulate, I think, these particular stocks. And moment I think you have the festive season started, I think you have the best time to book some profit. That is how we gain maximum into this kind of business, I think, which are holding into the portfolio, which assumes the seasonality factors.
It's good chatting with you. Thank you so much for taking the time out and joining in today. Let's get in some mid-cap trading strategies as well on that note. Kunal, what's on your list?
So NAM India Nippon Asset Management is something which looks attractive on the chart. The stock has given a swing breakout on the daily time frame, as well as a potential breakout heading towards a monthly breakout for itself. So would suggest a buy with a higher target of 440, stop loss at 390.
Right. Rudra, what about your mid-cap ideas?
See, for me, Raymond looks a very strong buy, and on chart from levels of around 2,200, it has just given the time-wise consolidation till levels closer to 1,650, where the strong support line comes. So for me, Raymond looks a very strong buy at current market price. Keeping a strict stop loss of 1,600, I'm looking at a bigger target of 3,000, which can come in a year's time from now. So Raymond is a good buy for me.
These are the top recommendations coming in from our charters, but let's get you the news flow from across the world as well. WeWork, the SoftBank Group-backed startup, has filed for bankruptcy. The bankruptcy filing is limited to WeWork's location in the United States and Canada. The company reported liabilities ranging from $10 billion to all the way to $50 billion. WeWork has suffered one of the most spectacular corporate collapses in the recent US history. It tried and failed to go public 5 years ago. Meantime, a month-long Israel-Hamas war has now killed more than 10,000 people, and the chances of coming it to an end seem grim. Though Israeli Prime Minister said he would consider tactical little pauses in Gaza fighting to facilitate the entry of aid and exit of hostages, he rejected calls for a general ceasefire. Meanwhile, UN Secretary General warned that Gaza was becoming a graveyard for children, calling for an urgent ceasefire in the region. And in a humanitarian gesture, India has sent a second consignment of 9 tons of emergency relief materials to Nepal for the quake-affected families. Nepal was jolted by a 6.4 magnitude earthquake last Friday that killed almost 150 people and injured many others.
And back home, first phase of the polling is underway in 2 of the states. Polling for 20 assembly seats is currently underway in Chhattisgarh, while in Mizoram, citizens are voting for 40-member assembly, where more than 170 candidates are in the fray. In fact, the counting of votes is scheduled for December 3rd. And Australia and Afghanistan will face off in the ICC World Cup match today in Mumbai. Australia, after starting off slowly in the tournament, have finally found their rhythm, and a win will put them in a prime position for a semi-final spot. It is to be noted that Australia has never lost to Afghans, but looking at Afghanistan's performance in this tournament, it's going to be an interesting one today.
Let's now go across to Sharad to get the latest on Dalal Street and what the khabar is like on Ramakrishna Forging. Sharad, take it away.
Well, yes, in focus we are having Ramakrishna Forgings, and the buzz in the street is that the large order might be expected from the railway segment for the company. Now, it's expected that one of the JVs of the company is expected to receive this large order, and importantly, the company itself recently come out with a very strong Q2 numbers as well, and a strong order inflow was there also across all the segments. Now, importantly, also important development coming in is that these orders are generally in the non-auto component segment, and currently for FY23 numbers we do check, the non-auto component actually comes up with a revenue contribution of 13% to the company. And Nuvama has also stated a revenue CAGR of roughly 18% from FY23 to FY26, and this is of course being driven by the MHCV segment. Also the non-auto component segment in the railway segment, especially with a recent JV they had with Titagarh Wagons and a couple of acquisitions also, which will be value accretive and will be giving an additional cash flows ranging between 3 to 5 to 100 odd crore rupees. Also, if you look at the valuations front, we did check the numbers on a 12-month forward PE basis. The stock is roughly at almost 25 times its PE ratio, and compared to Bharat Forge, that is coming in at almost 33 times. So there is a 24% valuation discount gap as well. So the stock would be in focus.
Okay, that's Ramakrishna Forging. That's the stock which is going to be in focus today. But Divi's and BOB as well would have been. BOB, after its earnings disappointment yesterday, Divi's, what the management had to say in their conference call is something that the street liked, which is why you saw that 4.5% uptick coming in the stock price, but a downgrade coming in nonetheless. Let's hear out Nikunj's take on both.
With PSU banks, I think it's getting more and more evident that the cost of liability or the war of liability which was there within the private and the PSU banking space has actually started hurting them. The ROAs, have they peaked out? If they have peaked out, what really could be the near trigger for at least large PSU banks? So suddenly, Bank of Baroda and SBI have started underperforming. SBI started underperforming 3 months ago. I think Bank of Baroda started underperforming from last 1 month. Why? That's largely because markets are saying that the ROAs have peaked out. Markets are saying the liability franchise in a short term will remain under pressure. I think that large part of the re-rating, look at Bank of Baroda, 3 month change just flat. My limited point is that while markets are excited about financials, I think markets would be preferring right now private banks rather than PSU banks, given that one-time re-rating in some of the private banks in the PSU banks is over. And Samit, when it comes to DVs, I guess, yes, you're right that the margins are under pressure, valuations are stretched, but then they're working on what could be called as this wonder drug GLP-1. And for me, the excitement in DV stock yesterday, let's look at the DV stock yesterday. I mean, why did the stock go higher yesterday? I mean, markets figured out the number they came during the market hour. And why did the stock go up yesterday? I think that's largely because of the timeline what they've given for GLP-1. So GLP-1, ladies, is this wonder drug. I'm not so sure of the generic name here. GLP, it is supposed to be used for diabetes management and weight management. Anything which has got to do with diabetes and weight management, well, the market size becomes very large. Diabetes is a problem globally, and weight management is something which everybody is working towards. So it's a new wonder drug which every company is trying to now develop, and I think Divi's has given a timeline there. So that's the catalyst. So my sense is that the downside gets limited. But for Bank of Baroda, I think the upside is limited. So if you have to recall, Bank of, I think Bharat Forge, buy on a bad day, Divi's, stay if you own it, and Bank of Baroda, you may want to sell on uptick.
Okay, that's the take coming in on Divi's as well as BOB. So those are going to be a bunch of stocks to actually look out for. In fact, let's just revisit that entire list. While the Nifty is headed in for a very flat start, it seems we're going to consolidate around that 19,400 print. I want to check in definitely on Divi's and BOB because each of them, one the top mover on the index and the other one the biggest drag within the liquid universe. Divi's seems like it's headed in for a dip and a bounce coming in for BOB. Who would have thought that? But in the meantime, let's also check in on what Bajaj Finance is doing. They've launched the QIP. They're looking to raise about 8,800 odd crore rupees via the QIP. So that's what we're picking up. Bajaj Finance holding up 1% as we speak right now. HPCL came out with its numbers. GRMs are above estimates. Look out for price action on that stock as well. 1.25% higher. Nykaa came out with its numbers too, wherein the EBITDA has shown an uptick of 32%, and the beauty and personal care revenues as well are higher by about almost 19%. I think some of it could also be the base effect, which could be at play. Who knows? There's Gland Pharma, RR Kabel. They all came out with good set of numbers. Paras Defense has come out with a decent set as well. The EBITDA, of course, has shown an uptick, though the margins are a little bit flat. That stock will just come for you on your screens too. There's also Radico Khaitan, excellent numbers there. Margins have come in at 13%. EBITDA jump up of over 34.5%. That stock also holding higher by 1.5% as we speak. And of course, a whole host of disappointments as well. Everything from a Man Infra to a V-Mart to Shobha Developers, Greenply, Reddington. They've all posted subpar numbers this quarter around. So let's just also take stock of, what some of the large caps have been doing. And Kunal, Divi's, especially after the big spurt in the stock price, a downgrade coming in right now. In the pre-open rate, it's indicating a downtick of 2%. But where do you think the stock is headed?
I think it's headed lower. I would believe that, so Divi's Lab had this good short covering rally in the month of February or March when the stock had recovered from 3,000 levels or sub 3,000 levels approximately to a 400-500 point rally. But I think post that we've not seen any major move coming up for Divi's Lab. Even if you look at the last 1 year performance for the stock as compared to larger cap, mid cap pharma names, or even in the last 3 years, the stock has been an underperformer. So just like what Lupin had gone through over the last 2-3 years, the stock was a drag, went on to get into a correction. I think Divi's Lab is acting as a very similar kind of a chart. Now it's very difficult to anticipate that when would the stock get into recovery, but I think only a break past about 3750 odd mark for Divi's Lab could be a good point to buy the stock.
Okay, let's also get you the index strategies too this morning and whether or not there is a consensus on what to trade when it comes to the index. And it's pretty much a unanimous call there from both Rudamurthy, who recommends a buy, and Kunal Bothra as well recommending a buy on the Nifty right now. For the Nifty Bank, that of course is the Moodometer consensus there. For the Nifty buy as well, pretty much the same. A buy from both Rudra as well as Kunal on the Nifty Bank too this morning.
All right, 48 seconds to go. 3 steps forward, 1 step back. That is the kind of market we are in. We are falling less, we are gaining more. The small cap index, by the way, guys, is at a fresh high. Small cap index is at a fresh high. The ring of that is magical, right? Bubble and trouble were the words which everyone used to describe the small cap momentum in India. But what has translated? Well, the reality is that The bull market correction had kicked in, savage, sharp, lasted for a few sessions. It shook up the trees. Hard traders and investors, they were forced to liquidate. Leverage factors kicked in, but given where the global cues are and the setup is, the comeback has been quite extraordinary. First rates any seconds now. It's not going to be a great start for benchmark indices because the handover is quite lull and dry, but look at the breadth. Hello. That is like the prime focus, which is 1127 versus 350 declining shares. So that's a ratio 1:4. One stock is going down, 4 stocks are going up, or 4 stock is going up, 1 stock is going down. Let me now start quickly addressing some of the newsmakers now. Not too many newsmakers, but in terms of the pharma, well, DVs came out with numbers yesterday during the bell. Indigo Concall has gone very well, and Bharat Forge numbers came during the market hour, and everyone is calling it expensive. In terms of price action, well, everything was centered around Zomato. Everything was centered around how things are going to move, at least for the entire fintech space, and couple of upgrades and downgrades they both have kicked in for some of the fintech and consumer tech stocks. But I think that's the breadth of the market which continues to be formidable. It does not matter what the print on the Nifty is or the print on the bank Nifty is. What matters is that the breadth is seemingly positive in favor of the bulls. Aisha?
Yeah, that it is. A couple of positive takeaways from a Star Health. They've recovered slightly with that 18% growth in the month of October. For Nykaa as well, the GMV has seen a growth of about 25%, and the beauty and personal care segment revenues have come in higher by 19%, and EBITDA jump up of about 32%. But I think there could be a little bit of a base effect as well at play over there. Nykaa holding up almost 4% higher this morning as we speak. Let's see what Bajaj Finance is up to. That QIP launch would be at play, although much in the news. It's only the pricing which is the new element here. 7609 for Bajaj Finance as we speak. Positive numbers from Imami. Positive numbers from HPCL as well, Gland Pharma, RR Kabel, Paris Defense, and even Radico Khaitan has come out with great set of numbers. Gland Pharma, by the way, has gapped up about almost 5% there. And you're seeing good reaction coming in on Paris Defense as well as RR Kabel as well. But then disappointing numbers coming in from an NHPC, from Movima, VRL Logistics, Man Infra, and even Shobha Limited, wherein the margins have actually fallen quite a fair bit, 10.25% versus the comparable of 14.25%, and the EBITDA as well has seen a downtick of 20.5%. Similar is the case with the Reddington 2, wherein the EBITDA downtick stands at 9.6%. Margins also have slipped about 60 basis points. And Greenply Industries 2, wherein there is a margin squeeze and the profits are lower starkly by about 41%. So these are a bunch of stocks which are in focus. Let's check in on what Divi's and BOB both are up to. BOB after that downgrade, the downtick in the stock yesterday, and Divi's as well, wherein Jefferies has downgraded it to a hold from the earlier buy and cut the target price as well. That stock too starts off a little bit lukewarm in trade. There's a downgrade from Citi on sale too, from the earlier buy to now straight away sell. So look out for that stock as well. That's also going to be in focus. Kunal, along expected lines, consolidation, or do you think we could weaken further from here?
I think we should consolidate over here. So 50 points minus for the index for the Nifty and 150 down for the bank Nifty. Nothing much to take away unless there is major signs of the larger cap names starting to show signs of underperformance. Now, in terms of opening trade, ICICI Bank is something which looks attractive. The stock did pretty well yesterday, closing towards its 50 DMA. So that would be a stock which I'd be keen to buy, specifically once it breaks past about the 50 moving average.
Okay. What about you, CA Rudramurthy? What are the opening trades you are punching in?
See, for me, this consolidation and this small dip of about 50 points on Nifty has to be used as an opportunity to buy. We are in a clear uptrend, no shorting this market whatsoever. So for me, 2 stocks looks very, very good to buy at current level on the opening trade. One is Vedanta. This stock has made that strong bottom at around 215, 218 level from where we are getting bounce. So I am looking for target of 250 to come soon on Vedanta. Available in future, one can go long. And even Tata Communications Communication looks good for me. This dip towards levels closer to 1,720, 730 is a great buying opportunity on Tata Communication. So a buy on Vedanta and Tata Com. Overall market, use this dip as a buying opportunity.